Multi-Chain Stores Limited, Delhi, has its branches at Lucknow and Chennai. It charges goods to its branches at cost plus 25%. Following information is available of the transactions of Lucknow branch for the year ended 31st March 2013. First we have balances on 1st April 2012. One is stock, then debtors, then we have petty cash. Stock is 30,000, debtors 10,000 and petty cash 50. Then we have transactions during 2012-13 Lucknow branch. Goods sent to Lucknow branch basically by head office at invoice price 3,25,000. Goods returned to head office is 10,000. Cash sales are 1 lakh. Credit sales are 1,75,000. Goods pilfered is 2,000. Goods lost by fire is 5,000. And if you notice, both these values are available at invoice price. Then we have insurance company paid to HO for loss by fire at Lucknow 3,000. Then cash sent for petty expenses are 34,000. Bad debts at the branch level is 500. Goods transferred to Chennai branch under HO advice is 15,000. Insurance charges paid by head office are 500. Goods returned by debtors are 500. Then we have closing balances of petty cash and debtors. We don't have closing balance of stock. It means we have to find. Then we have goods worth rupees 15,000 including above sent by Lucknow branch to Chennai branch was in transit on 31st March 2013. Okay, so whatever you have here that is sent to Chennai is actually in transit. Now you have to show the following accounts in the books of Multi-Chain Stores Limited. Number 1, you have to show Lucknow branch stock account. Number 2, Lucknow branch debtors account. Number 3, Lucknow branch adjustment account. Number 4, Lucknow branch profit and loss account. Excuse me. Yeah, sorry for that. And number 5, Lucknow branch profit and loss account. Or sorry, number 4, Lucknow branch profit and loss account, and number 5, stock reserve account. So basically we have to open all these accounts. So let's get started. Let's approach one by one. First, let us open in the books of head office Lucknow branch stock account. Let's go back to the question. We have various opening stocks, various items. Let's capture all. Let me just clear all this. Yeah. We have balances on 1st April 2012. In that we have stock 30,000 and this is basically at invoice price. So we are going to open Lucknow branch stock account where we'll capture, but also understand there is something called branch adjustment account which we'll be making use of. So in Lucknow branch stock account which is opened here, and don't forget this debit and credit. On 1st April 2012 on debit side we'll say to balance brought down 30,000. Now understand this 30,000 is at invoice price. And what is the information you have in the question regarding the profit? Question says it charges goods to its branches at cost plus 25%. It is at cost plus 25%. Okay, so whatever you have in the branch as opening stock 30,000, this includes cost plus 25%. If you are going to assume cost is 100, then it is at 125%. So this 30,000 basically represents 125%. And if you want to know what is the profit that is loaded, you have to do the cross multiplication. That is 25,000 multiplied by 30,000 divided by 125. Okay, so that will take it to an account called branch adjustment account. So we have here Lucknow branch adjustment account. Fine. In the opening balance we'll say that is on credit side by balance brought down, that is basically the loading on opening stock 30,000 multiplied by 1 by 5. We said 30,000 should be multiplied by, what was our calculation? Let's pick up from here. It should be multiplied by 25 divided by 125, right? So multiplied by 25 divided by 125, and this is nothing but 1 divided by 5. That's what you have here. 30,000 multiplied by 1 divided by 5. So you have 6,000. Right? So this is the opening balance on your branch stock adjustment account. Now the question is, how you got this opening balance, how you got this 6,000? That is basically from stock reserve account. It means we have to open something called stock reserve account. So that stock reserve account operates parallelly with your branch stock account. When your branch stock account has opening balance, and if that element is going to include profit, then your stock reserve account will also operate parallelly. It means on 1st April, parallelly you will have by balance brought down 6,000, and this is nothing but 30,000 multiplied by 1 by 5. It was this 6,000 which has been actually transferred to stock adjustment account. Okay, so on 31st March to stock adjustment, there is a transfer of 6,000. Fine. Now let's go back. We have seen the various effect of one single transaction. Going back to the question, we have opening debtors. How much? 10,000. So let's go to branch debtors account. It means we have to open this account, Lucknow branch debtors account. On debit side, on 1st April 2012, we'll say to balance brought down 10,000. So we have captured opening balance in debtors. Then we have petty cash 50. So let's open an account for petty cash also. So it is somewhere here. Petty cash account, debit credit. Since it is an asset, on the debit side we'll have opening balance. On 1st April 2012, we'll say to balance brought down 50. So we have covered more or less all items in the opening balance. Now let us look at the transactions that are happening during 2012. What are the transactions that are happening during 2012? Number 1, goods sent to Lucknow branch at invoice price 3,25,000. So this will appear on debit of branch stock account. This will appear on debit of branch stock account. So let's go to branch stock account. So here the date, since the dates are not given, so for all other transactions we'll assume dates are year end. Okay, so 2 goods sent to branch account 3,25,000, and you have to remember this item is at invoice price. So there is a profit that is loaded and that got to be removed. And how we do that? We'll do that through branch stock adjustment account. So let's go to branch stock adjustment account. On the credit, we'll say buy goods sent to branch account, which is basically loading. That is, we have to remove the profit. So 3,25,000 multiplied by 1 by 5. This 1 by 5 is nothing but 25 by 125. So you get 65,000. So in this way we have captured the profit that is loaded on goods sent to branch. Going back to the question, we have goods returned to head office at invoice price. Value is 10,000. So your branch account, already you have a debit for goods sent to branch. Now there is a return. So we'll say buy goods sent to branch 10,000. Now there is a profit element on this 10,000 that got to be reversed, right? So let's go to branch adjustment account and we'll debit the account. We'll go to branch adjustment account and we'll say load on goods returned, that is 10,000 multiplied by 1 by 5. So it is basically reversal of goods sent to branch, and we are saying that loading on goods returned, which is 10,000 multiplied by 1 by 5, and that works out to 2,000. In this way we have taken care of the profit that was loaded on returned goods also. Let's go back to the question. Next we have cash sales, which is 1 lakh. Then we have credit sales 1,75,000. And if you notice, credit sale will go to branch debtors account, whereas cash sales will go to the credit of branch stock account. So here we'll capture in branch stock account, we are supposed to capture both cash sales and credit sales. So first we'll capture cash sales by branch cash account. that is cash is going to come to the extent of 1 lakh. Then when there is credit sale, entry will be branch debtors. Entry will be branch debtors account debit to branch stock account, and the value is 1,75,000. So it means here we'll have branch debtors on account of credit sales, which is 1,75,000. It means another effect is we have to go to branch debtors account. The debtors balance will increase on account of branch stock. So in branch debtors account, we'll say to branch stock 1,75,000 on account of credit sales. So now both the totals are taken outside and it is 2,75,000. Let's go back to question. Next we have goods pilfered at invoice price 2,000. So to this extent we don't have goods, so we have to credit branch stock account at invoice price. So we'll do that. Buy pilferage account 2,000, buy goods lost by fire 5,000. Now both the items are at invoice price. It means we have to remove the profit loaded on these items by debiting branch adjustment account, that is by multiplying respective items with 1 by 5. Okay, so we'll go to branch stock adjustment account. We'll say to pilferage account. Okay, I mean basically a result of branch stock, where we'll say 2,000 multiplied by 1 by 5, 400. Then branch stock account again, that is entry is branch stock adjustment account debit to branch stock account. I'm sorry, the entry is actually branch stock adjustment account debit to the respective pilferage or lost by fire. But here what we have to notice, we have to remove the profit element, and in case of goods lost by fire 5,000, the profit element is 25 by 125, that is 1 by 5, and it works out to 1,000. So now again let's go back, but one thing we have to keep in mind, these two items, okay, what we have done is we have removed the profit, but there is a loss, and that loss have to be factored. That is, this pilferage 2,000 is the pilferage, of which 400 is the profit element. It means the actual loss is 1,600. That should actually go to branch P&L. Do we have branch P&L? Should we prepare branch P&L account? Yes, question says we should prepare Lucknow branch P&L account. It means let us go to branch P&L account. We'll go to branch P&L and there will account for this. Okay, so we have to open branch P&L account. In that we'll account for pilferage, that is to pilferage at cost, it is 1,600. This is nothing but 2,000 minus 400. Okay, similarly we should also provide for the loss that have taken place on account of fire, but if you want to understand what is the exact loss, you have to open a separate account for loss of stock on fire. Okay, so let me do that. There is a separate account called stock lost by fire account. Okay, and the entry is, originally we passed an entry in branch stock account. We'll take that entry as a base. The entry is by stock lost on fire account debit to branch stock account. So that's how we have passed the entry 5,000 and 5,000. It means this stock lost on fire account should be debited by creating the stock account 5,000. So let's see whether that was done. Yes, stock lost by fire account was debited by creating the Lucknow branch stock account 5,000. Now from this 5,000, what we have done in stock adjustment account? In stock adjustment account, we have unloaded the profit, and the entry is branch stock adjustment account to stock lost by fire. It means your stock lost by fire account should be created by branch stock adjustment account to the extent of 1,000. So what is the actual value? Actual value is 4,000. Now let's see whether we have any additional information in the question regarding the stock that was lost by fire. Yes, we have. That is, insurance company paid to HO for loss by fire at Lucknow 3,000. So now we have understood the actual loss was 4,000. Insurance company has paid 3,000, so the loss that should be charged to P&L is only 3,000 minus, or 4,000 minus 3,000. So let's record that here. That is, bank has given the insurance claim 3,000. So now what we understand, 5,000 minus 1,000, 4,000 is the value, and out of 4,000 we have received a claim of 3,000. So actual loss is 1,000. This 1,000 should go to P&L. So we'll write by branch P&L, which is nothing but the balancing figure, 1,000, right? And how I got this balancing figure? On debit we have 5,000. So on credit also that 5,000 has been written. 5,000 minus 4,000, we have the balancing figure which should go to branch P&L. Okay, so in this way we were able to find out what is the exact loss on account of fire. Now going back, so we have covered all the items in this page. We'll move on to next page. We have cash sent for petty expenses 34,000. Okay, it means HO has sent 34,000 cash. Already there is a opening balance of cash of 50. So now what we'll do, we'll go to petty cash account. We'll go to petty cash account. We'll add two cash sent 34,000. So the total cash available should be 34,050. Fine. Now let's see whether there are any other transactions and we'll come back. Going back to the question. Next item, bad debts at branch. This bad debts at branch 500 will reduce debtors and eventually they should be transferred to branch P&L. So we'll go to branch debtors account. There we'll write by debiting branch P&L, right? So entry is branch P&L debit to branch debtors credit, and it is on account of bad debts, which is 500. It means when we open branch P&L, on the debit we have to write to branch debtors within bracket bad debts 500. That is taken care. Then going back to the question, we have information that is goods transferred to Chennai branch under HO advice. So as far as Lucknow branch is concerned, it is as good as goods that are returned to HO. So in branch stock account, we'll write by Chennai branch. Okay, we'll write by Chennai branch 15,000. Okay, so instead of saying goods sent to branch or goods returned to HO, we are saying we are debiting Chennai branch 15,000. But here we have to indicate or mention that goods transferred, but it is still in transit. Now when these goods are transferred, we have to understand this is at invoice price. So there is a profit element that have to be, that loading have to be removed. So let's go to branch adjustment account. In branch adjustment account, let us factor. The entry is Lucknow branch adjustment account debit to Chennai branch account. That was the entry we had. Okay, we have to remove the profit. So 15,000 multiplied by 1 by 5 and it is 3,000. So that element is taken care. Let's go back. We have another information. Insurance charges paid by head office is 500. So that will go to branch expenses to insurance. It comes to 500. So that is taken care. Then we have goods returned by debtors. Goods returned by debtors, it is 500. So this will reduce the debtors, but at the same time increases the branch stock. So in branch stock, we'll say on the debit side, to branch debtors account 500. In branch debtors account, by branch stock 500. And it is returns inward. Then we have closing balances of number 1, petty cash 230, debtors 14,000. So first let's go to petty cash. Petty cash, we got closing balance is 230. So now if you notice, on debit side we have total as 34,050. On credit side we have closing balance is 230. So let's write the higher total both sides, 34,050. It means on credit side we have a balancing figure that works out to 33,820, and this is nothing but branch P&L. This is nothing but the expenses which are transferred to branch P&L. So we'll write by branch P&L basically the expenses, and these are all nothing but the balancing figure. So let's go to branch P&L and we'll account for this petty expenses. So in branch P&L, we have to account for those petty expenses, which is the 33,820. Then we also had information about closing debtors, which worked out to 14,000. So let's go and capture that also. By balance carried on, and it is 14,000. So now let's do the balancing of debtors. On debit we have two items, total works out to 1,85,000, so that appears to be the highest, so we'll write it on the credit side also, 1,85,000. On credit side we had three items, all were considered. It means there is a balance on the credit side and that works out to 1,70,000, and this balance is nothing but the cash that are collected from the customers. This balance is nothing but the cash that are collected from the customers. So we'll say by branch cash, which is a balancing figure, cash collected from customers 1,70,000. Next, what are the other items we are yet to cover? So we are yet to balance this branch stock account. We have balanced branch debtors account. We are yet to balance branch stock adjustment account. So how we are going to do this? For this, first of all, we have to open branch stock account. Sorry, we have to close the branch stock account. I'm sorry, we have to close branch stock account. So let's go to branch stock account. We have three items on debit. All three totals to 3,55,500. We have four items or five items on credit. So total on debit side appears to be higher. Let's write that on both sides. It is 3,55,500. It means on credit side there is a balance and it works out to 48,500, and that is nothing but the closing balance of stock. So we call it as by balance carried on, which is 48,500. Now this closing stock will have a profit element that have to be removed. So we have to debit the branch stock adjustment account on 48,500. So we'll go to branch stock adjustment account. We'll say what is the profit that is loaded on closing stock, that is 48,500 multiplied by 1 by 5, that works out to 9,700. So that comes as closing stock, or that comes as loading on closing stock. So we'll say to balance carried on, it is loading on closing stock. Now let's do the total. On credit side, total is 71,000, so it appears to be higher. Let's write it on both sides. It means on debit side there is a balance. The balance works out to 54,900, and this is nothing but the gross profit, and that should be transferred to branch P&L account. So to branch P&L account we have to transfer 54,900. And do we have any other account still pending? I think we had stock reserve account. Yes, stock reserve account opening balance is what we have transferred to stock adjustment account. Similarly, there was a closing stock. That closing stock had a loading 9,700, so that should go to stock reserve account 31/3/2013. Okay, to balance carried down 9,700, and it is transferred to stock adjustment, that is branch stock adjustment 9,700. In that way the stock reserve account is closed. So what is the account still pending? It is only branch P&L account, and in branch stock adjustment account we have to transfer this 54,900 to branch P&L. Entry is branch stock adjustment account debit to branch P&L. It means branch stock adjustment, we have to write over here 54,900 to branch P&L. So 54,900 on credit appears to be the highest value, so we'll write it on both sides 54,900. It means on debit we have a balance, but before that let's ensure that we are capturing the stock that is lost in fire, only the lost portion. For that we had a working, and we said that 1,000 should come to P&L. Yes, that 1,000 is there in P&L. It's just to check whether we are on the right path. Okay, so now we have captured 5 items on debit, so there is a balance and it is 17,480, so that will get captured in general P&L, that is basically transferred to general P&L. So we say branch profit is transferred. So in this way we have captured all the items, and we have covered all the accounts that was necessitated by this question.